Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? So in today's episode, I am joined here by the one and only Mr. Chris Naugle. So thanks for joining me, man. How are you doing today?
Doing great.
Doing good. So anyways, we're out here in New Zealand still, and as you can see for my YouTube folks, we only got one mic, so just bear with us. As y'all know, the studio is in renovation right now back home in Daytona Beach, Florida, so I'm excited to get back home and kind of organize some things as we move into this new cycle of the podcast era and just my new home over there. But in today's episode, because we are still here overseas, I wanted to talk about how do we implement the infinite banking concept outside of the United States. You know, we get so many messages, right, Chris? So many messages from folks in Singapore, New Zealand even, the UK, Australia, South Africa. Hey, Chris, I stumbled upon your YouTube channel. How can I practice this concept out here overseas? So we're going to talk about that here today. But before we get into it, one thing I kind of want to just talk about, because Chris, we were kind of having some conversations, you know, when people come to us and they ask, well, hey, what do y'all do? And what really is the infinite banking concept? Chris, I want you to tell me what the wrong answer is.
Well, the wrong answer would be it's a whole life policy, or gosh, the real wrong answer, an index universal life policy, because that's what people think. They think it's a process, or they think it's a product when it's really just a process.
Yep, that's it. So, you know, because people, they hone in too much on the vehicle itself, right? Like I actually just, for instance, last night at dinner, I was sitting down, I was talking to a gentleman, Tom, and Tom asked me, Hannah, what do you guys do? And how I answered the question back to him is I say, well, I help show people how to take back the control of the banking function in their life. I teach folks how to build, keep, and create wealth through their own debts and expenses that they already have. You'll notice in those two short, I don't know what you want to call it, elevator pitches maybe, but you know, just in those two brief sentences, I never bring up the product of a whole life policy. Yeah, we want to use a whole life policy because of the features and the benefits that come from utilizing a whole life policy with a mutually owned insurance company, but it's not the product. It's the process of our banking and how we're accomplishing that through the whole life policy. So, Chris, I guess I want to ask you, because this is kind of like a almost part two. You have your YouTube video and it's titled How to Practice Infinite Banking Outside the US. So what would you tell folks who maybe are in Australia or other places where whole life is not available?
Yeah, I mean, the funny thing is, whole life is only available in North America, and the people from like here, New Zealand or Australia, that constantly reach out to us, they think, you know, they want to do the infinite banking concept, but then when we tell them that the whole life policy that they need is not there, they just shut down and they don't want to hear it. But then I made a YouTube video, where I said it's not about the product. The infinite banking concept can be done from a bank account, from a 401k, from any place where money is stored. It just happens that the whole life policy is the most efficient way to move money. Yeah, it's just the best machine to use. But if you don't have the machine, well, I mean, you still can do it. It's a process. So, I mean, what I did in the video is I just showed people the process, the circle. Money starts in a place, okay, and try to find the best place you can. Move the money over to the different things that you're going to do in your life, from paying off debt, buying cars, buying anything you really, would normally finance, or investing, and then take whatever the earnings are and take it back into the account at the same rate that they would have been paying the credit cards, the car loans, and anything else. And when I showed that to them, and it's a lot easier from a visual standpoint, it made sense, because they're like, wait a second, we don't have to have the whole life policy. We can do this from a bank account. Of course you can. You're just going to miss out on uninterrupted compounding interest. But hey, listen, if you don't have it, you don't have it.
Yep. No, that's it. So bank accounts, 401ks, brokerage accounts, any type of account, because all you're doing, and I actually talk to my clients about this a lot, totally take the policy out of it. even just budgeting. Y'all, some people come to us, right? You get this probably too. Some people will come to us and there's more month left over at the end of the money, and they think IBC is going to solve all of their problems. Y'all, if you don't know how to budget, pay yourself first, this concept is you're not ready for it. You still have your floaties on and you're still in the kiddie pool right now, right? So, what essentially Chris is saying is he's using if a whole life is not available in your country of where you live, number one, I guess one thing I'm thinking of, hey, I actually have some families where maybe their family members or so themselves, they're overseas, but their family lives over here in the States. Hey, y'all, I mean, you can always put a policy on somebody that you have an invested interest in. So I have some people who actually put policies on their, adult children that are living over here or other family members. They own it. The other person who's living here in the States, they're the insured body, and then they're able to use it. But then obviously, right, premiums just got to be paid in US currency. So that's always an idea. But essentially what we're doing is instead of using the policy to do so, well, hey, I could do this same process with maybe my checking or savings account down at the local bank. Let's say that I pay my deposits, or how we like to call it, premium deposits. I put my deposits into the bank, and as Chris says, open up a separate account. Don't just use the main account. You need to have that separate account that you put those deposits into. Pay yourself first. Then, for instance, if we're doing it for credit card, here, I'll have you explain this. Let's say that we have some credit card debt and we're going to use a traditional bank account, but we're going to practice becoming our own bankers. How would somebody do that?
That's easy. They're already doing it. So you got money in the bank account, right? You've saved up, and I'd prefer it to be a secondary account, like a segregated account, like Hannah was mentioning, because then you're not going to be as prone to going in and stealing the money from the bank. You're not really stealing, but taking it out to buy that Valentino bag or whatever else. People are always tempted to take money that they've saved for something else and blow it. So use a separate account. Don't get a debit card on that account. Heck, just put it in there and make sure it's a bank account that's more difficult to access. Then you've got a credit card every month that you make payments to, and you never complain. Well, maybe you do, but you make the payment every single month. Just be aware that that payment you're making always includes interest. A lot of the credit card payments are just interest, but maybe interest in principal. So you're already making that payment. So let's just kind of pick some numbers out of the sky. You got a $10,000 Visa, and every month you pay $200 a month to Visa, minimum payment, and that's 20% interest. So got the numbers? Okay, you got $10,000 owed to Visa, $200 a month is your minimum payment, which means you're just paying interest, and the interest per year is 20%. So you've saved up in this segregated bank account $10,000. So you got 10 grand sitting in the bank. You're going to take the 10 grand out of the bank. Think of this as a circle, just drawing a circle. Take it out of the bank, move it across the top part of the circle, pay off Visa. Now, Visa's gone. You no longer owe Visa anything, and that $200 a month payment no longer needs to go to Visa, but don't stop there. That's where everybody stops. They think, oh gosh, I paid it off. And then what do?
That's free
Then
money.
then they rack it up, or they take the $200 a month that they used to pay to Visa and they just go blow it on stupid stuff. Okay, so don't do that. As soon as you pay Visa off, change the name on the check. Change the name in the bill pay. It used to say Visa, now it's going to say your name. And every single month, set this up on an automated basis. That's key. And have that money go back around the bottom part of the circle into that segregated account where it came from. See what I just did? I connected the dots. Money started on the left, move over to the right, paid off the credit card or invested or whatever you're doing over here. Then it goes around the bottom part of the circle and lands in the exact same place it came out of, except now when it lands in that place that it came out of, it's $200 a month, but it's recapturing and recycling 20% that you used to give away. Yep. So what's your effective return on your money? 20%. People take excessive risk to make 20% and often lose money. Here, there was no risk in that transaction. It was completely risk-free. And you just made 20%, and that 20% will continue to build and build and build, that then that money can go around the top part of the circle to the next place. Where maybe it's paying off your car, or maybe it's investing in something that you know, like, and understand. You see, the more times you move money around that circle, the faster your banking system builds.
That's it. No, and I love that because people can start to incorporate even like some of our folks, right? Maybe they don't have family members, they are not insurable. Even folks in the States, if you're not insurable, you have no family members that you can even put a policy on, you can still practice this concept. It's all about the process of the banking and controlling that function in your life. And I think, honestly, really what it comes down to, I think it's just a lack of discipline.
That's it.
It's just a lack of discipline and the lack of sometimes knowledge, right? That we're not taught how to pay ourselves first, save money. I always say all the time on the show, hey, we're taught to be great worker bees. We all know how to go out there, make the money. When we start going broke, we'll start picking up jobs and doing things to make the money. But then as soon as we make it, we go and spend it just like that.
By design.
I know. Control, right?
All of it, everything in your life, you are taught to give up control of your money. You're not taught to control your money, and that's by design. If you think that's a mistake, it is not. Why is it that the banks control almost everything? Why is it that the hedge funds like BlackRock and Blackstone and Vanguard, for that matter, why is it that they own everything? It's because you gave them your money that you worked for, and they got to use your money to go out there and control almost anything they want to control. It's your money. It's all of our money. We gave that money to them, and they then in return gave us some hypothetical return, which sometimes we make, sometimes we don't, but it's not certain. But because you gave up control, they have the control to build to levels you will never be able to until you take back control of your money like we're telling you how to do.
That's it. And I think it starts at the conversations of a family table.
It does.
People don't want to talk about money. It's a very hard subject. We're not taught to how to bring it up in conversation. And so that's why I think it's so important too. Actually, since I'm thinking about it right now as well, how are you incorporating money skills, money management with Vivi right now? And y'all know Vivi. It's Chris's, what's she now? Three years
Yeah.
old? 3.5. So it's Chris's 3.5-year-old daughter. I just remember seeing videos where she'll be chanting, become your own bank, BYOB. So what are y'all doing right now in your daily life to teach Vivi at a young age about money and about banking?
Yeah, so I play this game with her. She's got like this little toy register with toy dollars and cents, and she's also got little piggy banks. And what we do is like we'll separate all the money, and I'll explain her which what the monies are. But then I point to something. I say, Vivi, go get one of your toys. So she'll grab one of her toys, like a stuffed animal, and I'll say, how did that toy get in your hands? And she doesn't really know how to answer it. I say, well, somebody took money from their piggy bank and they paid money to somebody else so that you could have that toy. And I said to her, and then I basically just show her, I show money goes in the cash register, and then she gets the toy. So I show her the denomination, and then I say, but you own the register, you're the bank. And then I'm starting to show her these little things. But I'm also, this is beyond her level of understanding at this point, but I'm getting ready. When she gets older, anything that she wants, we're going to have rules. She's going to have budgets. So if she wants something like stuffed animals or anything or clothes, she's going to have a set monthly budget that she can always use. And then when she exceeds that monthly budget, she's going to have to borrow money from someone else's bank, and it'll be from our bank. But I'll explain to her, this is money coming from mommy and daddy's bank, and you have to pay us back this money with interest because you ran out of money in your bank. So we're going to start showing her all these things. And as she goes through life, I'll teach her the importance that when she takes money from her bank, she must return it with interest. Never steal from your bank. And these are just different principles. So simple, but from a young age, right up through her being a teenager and eventually an adult until I'm gone, she will understand that when she wants something, she needs to be in control of the money to buy it, or she has to borrow money from somebody else. And then what she's got to do is pay that somebody else interest. When I'm going to say, listen, this is how much interest you're giving. All of this could be in your account if you followed the rules.
Yep. No, I love that. I love that. All right. Well, so it's very simple, y'all. I mean, at the end of the day, you can practice banking whether you're outside the States or in the States. We just recommend using a whole life policy that's designed for immediate high cash value because when you're working with a mutually owned insurance company, these products, right, it's guaranteed interest plus our dividends. It's protected against judgments, lawsuits, liens in most states. And we have the freedom. Nobody can go in there and touch the money besides you, the policy owner. So that's just why we're utilizing these. And then on top of it, earning the uninterrupted compounding, or what I always like to call the opportunity cost of the money. But I get it. I know it's not available everywhere, and right now we're kind of working on things to even make it for the Money Multiplier team. I don't even know I told Chris this yet, but our Puerto Rico folks, right? We got a lot of folks in Puerto Rico, and we're trying to find a good home for y'all. And we're out here on this trip with an insurance company, and so I've been having those conversations with the head honchos over there just to make it more accessible to you folks in Puerto Rico. But again, you don't have to have a whole life policy to understand the control of the money. So hopefully that's what you got out of today's episode. Chris, is there anything else that you want to leave the audience or the community right now?
I think the only thing I want to leave is because some of you, if you're not in the US, you're probably thinking, well, why don't we have a whole life policy? Like, why can we not get that where we live? And it really comes down to what we started with is you are not supposed to be in control of your money. So with the whole life policy, well, first off, it's a profitability thing. Yeah. Like here in New Zealand, when you look at all the insurance companies out here and you ask, why wouldn't they have whole life? Because it's not profitable like term insurance, like the thing you're always told to buy, right? Buy term, invest the difference. But you never ask, why am I being told to buy term? Well, could it be because it's the most profitable life insurance that the insurance company can sell because they have to pay out less than 2% of the policies? But see, people don't think like that because we're taught to think cheap is better. Yeah. Cost is only an issue in the absence of value. Your value system's just messed up. Get your value system in order, and then all the other things fall into place. But the reason you probably don't, if you live outside the US or Canada, that you don't have a whole life policy is because they don't want you to have control of your money. Plus, the tax advantages we have in the United States, not Canada, but the United States, are the best there is inside the whole life policy. And then you ask yourself, well, why is it that way? The tax code was written to favor life insurance because the wealthiest families have their capital in whole life insurance. So a lot of times when people just don't understand why it is the way it is and why we use what we do, just trace back the source and then look at the things that just fall in place, like the tax code. If this wasn't the place where wealthy had money, why would it be so favorable in the tax code? Why would it be the internal buildup of cash value was completely tax-free as long as it's designed right? When you start asking these questions and you start logically thinking through why this is the way it is, it all starts to make sense. Yeah. And it also starts to make sense why it's not available in other countries like New Zealand.
Yep. Oh, and isn't it such a beautiful country around here? Yeah, so Queenstown has been my favorite so far. So, and Chris, actually, before we go too, where can people find you at?
Yeah, so it's easy. Just go to YouTube and the Chris Naugle, Naugle, or my website, chrisnaugle.com.
Good. And join us. So every Wednesday, Chris does 3 shows every week on Wednesdays. We got the What the F Happened, just a big news update, markets update. I enjoy tuning into that one. He's got a Wealth Wednesday webinar that's at 1 o'clock Eastern time. And then we have the Ask Me Anything weekly webinar where he'll go live. So you'll go live on your YouTube channels, and then also we got our Facebook group. So just reach out to me if y'all want to join the group. My email, Hannah spelled the same ways, forwards and backwards, Hannah at themoneymultiplier.com. I'll send you those direct links to join the Facebook group and the YouTube channels and different things. But every week, I mean, all this stuff is free. We just create free content because we want y'all to understand the knowledge, and it all goes back to that late Zig Ziglar saying, hey, if you help enough people get what they want, you in return will get what you want. So it's just been very fulfilling. So Chris, I appreciate you. We're going to do another episode here soon. Once we get back home, we'll coordinate. So Thank you for tuning in today. I will catch y'all next week. So every week on Tuesdays, a new episode will launch. So subscribe to the YouTube or follow us on any other podcast platform. We stream everywhere: Spotify, Google, Apple Podcasts, even other ones that I don't even know the names of. So thank you for being here, and I'll catch y'all next week. Bye, y'all.